and welcome. This is Bloomberg Quint Live and I'm Alex Matthew. It's been a busy day for the markets as they snapped a 4-day winning streak after fluctuating between gains and losses all throughout the trading session. So what did you miss? Let's take a look at the headlines. HDFC Bank has board approval to raise 24,000 crore rupees, one-third of which will come from affiliate HDFC. RBI initiates prompt corrective action against the Bank of India on account of its high non-performing assets, insufficient capital and a negative return on assets for 2 consecutive years. In a setback for IndiGo, the Delhi High Court has rejected its plea against moving part of its operations to Terminal 2 at Delhi Airport. The airline has time till the 15th of February to shift base. Paytm founder Vijay Shekhar Sharma took to Twitter to say his company's QR code-based service would charge 0 fee on all transactions. And it's a big legislative victory for US President Donald Trump. The US Senate passes the biggest tax overhaul in over 3 decades with 51 votes in favor. The US Congress is all set to give its final stamp of approval later today. Now, Indian equity benchmarks snapped 4 days of gains after fluctuating between gains and losses all through the session. Gains in Hindalco Industries and ONGC were countered by losses in Dr. Reddy's Laboratories. Pradeep Pandya is standing by to take us through all of the action that took place on Dalal Street today. Pradeep?
Well, markets were doing well for most part of the day, but towards the last hour, we saw some correction in key indices. So Nifty and Sensex closed lower. Sensex down by around 60 points in last hour of trade. Banking was especially a sector that dragged the markets down. If you look at Nifty Bank or the PSU Bank Index, that will tell you how it really looked. PSU Bank Index lost more than 1%. Well, in terms of contribution to the index, actually the HDFC and Kotak Mahindra Bank weighed down on Nifty really, but we saw a deeper cut in PSU banking stocks. For example, Punjab National Bank that opened lower and stayed close to the lower level through the day because QIP shares issued under QIP hit the market today. And also Bank of India fell in last hour of trade when the news came in about prompt corrective action against the bank. So this was one sector that kind of dragged the market down. On the other hand, we had real estate leading the market. Both the key stocks, DLF and iBull Real, fairly liquid. And broadly traded stocks were up in today's trade. We also had some of the interesting themes that continue to move up, like the agri stock or the rural economy bets that started 2 days back after the Gujarat result. Jan Irrigation continues to move up today. Jet Airways was yet another stock that has been doing well this week, is all set to post decent gains over the week. But a surprise movement came in ADAG stocks. Reliance Communications gaining 35% and Reliance Naval 10.5%, while interestingly, the news flow is negative. Reliance Communications dollar bond holders are trying to take certain actions against the company. They have come together and hired an advisor, and Reliance Naval also failed to secure the relief in the bankruptcy case, but stocks moved up nonetheless. PSU telecom companies did well today on hopes of revival. There are some comments coming in from top government officials that kind of boosted this entire sector. Net, if you look at some of the high beta names in construction, infra like NCC, GMR moving up. You had stocks like Morupen Lab, Ramco on some news or otherwise moving up. So there was significant traction in mid cap and small cap, although indices actually corrected in last hour of trade.
Absolutely, Pradeep. Thanks so much for that wrap of the market action today. But let's move on to the big story that we've been talking about. The board of HDFC Bank has approved the plan to raise 24,000 crore rupees. This comes a day after HDFC's board approved raising 13,000 crore rupees, most of which will be infused into HDFC Bank. The fundraising plan comes against the backdrop of strong growth in the bank's balance sheet over the last 2 years and an expectation that credit demand will revive as the economy stabilizes. Detailing its fundraising plan, HDFC Bank said that of the 24,000 crore, 8,500 crore will be through an issue of shares on a preferential basis to HDFC. The remaining funds will be raised through an issuance of equity shares. All options are open with regard to the vehicle of issuance. Now, a day after the board of HDFC approved a 13,000 crore rupee funding drive, Vice Chairman and CEO Keki Mistry says the fresh funds would be used to grow the mortgage lender's non-core businesses like health insurance and affordable housing. He also said that the funds would be enough to sustain growth for at least 5 to 6 years. Listen in.
We are looking at setting up either a fund or a company which could look at investing in real estate projects which are under some stress. So we know that, this is a core competence. We understand real estate in India, and we can identify real estate projects where there is some degree of stress. We can go to the builder, take over these projects at an incomplete stage, get the construction completed through another developer, to a reputed developer, and then using the HDFC brand and using our supervision and our skills, we will then turn it around and sell it sell the project. We believe that the scope or the potential for health insurance growth in India is large, and that's the reason why we are looking at getting into it.
Now, as banks in India prepare to meet Basel III capital adequacy norms, quite a few of them have tapped the capital markets. So how much capital have Indian banks raised this year? Shraddha Babla answers that question in this report.
69,000 crores, that's the number, that's the equity fundraising that has been done by banks cumulatively so far this year. That's in financial year 2000 and FY18. In fact, as much as 33,000 crores of this was raised by banks via QIP issue specifically this year itself. And if you look at that number, 33 to 48. Now, this is an interesting table. This is the data that we've got from Prime database. The QIP issuances by banks this year, the total amount is more than what they have done in totality over the last 5 years itself. So that really shows you how much of money they have actually raised this year. And if we move forward, we'll also see that this is basically a picture or the table of who has raised how much and when. Of course, SBI's issue was the largest at about 15,000 crore rupees. So this 69,000 crores is not the only number. In fact, a lot of PSU banks already have board approvals to raise more money, so we could see some more fundraising announcements happening in the rest of the financial year as well.
Well, Pradeep alluded to this, and this came quite late in the market session, but Bank of India fell as much as 5.4% in trade after the RBI placed it under prompt corrective action. The move is on account of the bank's high non-performing assets, insufficient CET1 capital and a negative return on assets for 2 consecutive years. That's according to an exchange filing. The bank had reported a gross non-performing assets of 12.62% in the quarter ended September. It is the 9th bank to be put under the Reserve Bank of India's prompt corrective action after the framework was revised in April. On to the latest deal on the street. Edelweiss Wealth Management is all set to acquire Religare Enterprises securities business. Saloni Dhanuka gets all the details for you in this report.
Edelweiss Wealth Management will be acquiring the broking business of Religare Securities. Now, the acquisition includes their securities, commodities, as well as their depository services. However, no financial details of the deal have been out yet. So, as a part of the deal, Edelweiss will take on pan-India distribution of around 1,250 locations, 90 branches, and over 1 million clients of Religare Securities. Now, mind you, the acquisition is still subject to regulatory clearances. Also, Edelweiss in past have always looked at synergistic growth opportunities, especially for its AMC business. Now, this will be Edelweiss' third acquisition in the broking business, as it first acquired a retail broker in 2010 named Anagram Capital, and then Rushnil Securities in 2011. Also, earlier in the day, we spoke to Mr. Nitin Jain, who is the CEO of Global Wealth Management team at Edelweiss. He believes that this acquisition will bring Edelweiss close to number one player in the AMC business in India. So let's listen in.
With this, we become in that specific segment definitely number one and very close to number one in the overall wealth management space. This business has been doing quite well for us over the last 2-3 years. All the investments that we made in 11, 12, 13 have now resulted in meaningful growth upwards of 50 to 60% year on year for the last 3-4 years. And from practically being outside of top 10, now they are amongst the top 3 wealth management firms in India, and eating into market share of the top guys as well. So the business has been growing. The profitability is also starting to come in. Now we are hitting anywhere between 15 to 20 bips of average AUM in terms of profitability. This acquisition actually, I think, over a year period should add to the profitability meaningfully. Because don't forget, this affluent segment is actually a reasonably profitable segment. If you get a cost structure right, very few people in India have actually been able to crack this model, and we've been lucky to have leadership which has actually delivered serious profitability in this business.
Now, Maruti Suzuki has made it to an elite club of listed companies with a market capitalization of more than 3 lakh crore. The country's largest car maker, which has gained more than 85% in 2017, is also one of the 3 nifty companies with a share price of 10,000 rupees. Jayesh Khilnani is here to tell us all about these elite stocks. Jayesh, over to you.
So Maruti became India's 5th largest company as of yesterday's close, and today early in the morning it hit an intraday high of 10,000 rupees a share before cooling off and ending the day lower by about 0.6 or 0.7%. Now, with the 10,000 rupee mark, what it has done is that it is now Nifty's 3rd company that has crossed the 5-digit mark. That's the chart for you of Nifty's 3 musketeers, where the share price is more than 10,000 rupees a piece. Eicher Motors and Bosch before this were commanding a price of more than 25,000 rupees, and with that, Maruti has now joined in with a share price high of about 10,000 per share. Now, if you look at the returns delivered by all of these 3 companies, very interesting to see that Bosch has actually delivered negative return of about 6%, and if you can go back to the previous chart, that is, Bosch has given you returns of negative 6%, and Eicher has given you about 41% this year. Maruti, the only one which has given you return of in excess of 80%. So what happened today was that it actually clocked a market cap of 3 lakh crores. Out of this 3 lakh, 1.4 lakh crores have been added in 2017 itself. As far as the valuations are concerned, on an FY19 estimate basis, Bosch commands a premium of about 33 times its FY19 earnings. Eicher also above 31 times. Maruti, the only one which is below 30. So, on a relative basis, this still looks cheap, even though the price is at 10,000 rupees a piece.
Now, Jayesh, it might be a case of sour grapes for me, but I'm still curious to know, if I had invested at the time of listing, how much would I have made as of now?
So, what we did was in 2003, when Maruti actually got listed, the IPO was, done at 125 rupees a piece. It actually ended the year with about 376 rupees for a share. At that point in time, the Maruti Alto, which was a new launched, low-cost variant, that costed about 3.7 lakh rupees. And instead of, buying the car, you had invested in Maruti shares. That is, you would have got about 1,000 odd shares. The value of that today would have been a staggering 1 crore rupees, and you'd be driving a Jaguar XJ.
Well, Jaguar XJ or some other car of the like, but I'm sure that if I had invested that much money, I'd be a millionaire. Thanks so much for that, Jayesh. Now let's move on. Macquarie Research remains bullish on ONGC on the back of the rise in crude prices. It set a target of 290 rupees for the company, the most bullish estimate on the street. The brokerage also has a bull case target price of 345 rupees a piece if oil prices go as high as $75 per barrel. Macquarie expects the oil explorer to benefit from the surge in Brent, predicting the long-term oil price at $65. Now, Brent crude has risen nearly 39% in the last 6 months, compared to a 12% rise in ONGC shares. The current stock price reflects oil at $52 a barrel, according to the report. Costlier oil improves realizations and margins for the company. Macquarie also expects ONGC's gas realizations to rise to $4.3 per million British thermal unit from around $3 per MBTU on the back of an expected increase in administered prices. Moving on, the Delhi High Court has dismissed IndiGo's plea against the Delhi International Airport's decision to shift a part of its operations from Terminal 1 to the newly opened Terminal 2 of the Indira Gandhi International Airport in New Delhi. Arpan Chaturvedi, who is covering the case, sums up the court action in this report.
Well, in this case, what IndiGo's plea was, it was basically a petition against the order of the Delhi International Airport Limited, or DIAL, which directed the company IndiGo to and to some other companies to partially shift their operations from Terminal 1 to Terminal 2. Basically, what that means is that certain flights which are operating for IndiGo to Delhi Airport, Delhi, Bombay, and Hyderabad, they were directed to be to start operating it from Terminal 2. Against this, IndiGo had approached the Delhi High Court, saying that this order of DIAL was arbitrary, but the Delhi High Court, as we know, has not accepted the plea by IndiGo. And what small relief that they have got from the court is that the deadline for shifting of operation was January 4, but the Delhi High Court has extended the deadline, saying that that the partial shifting of operations now should take place by February 15, 2018.
Now, Paytm founder Vijay Shekhar Sharma today took to Twitter to say that the company's QR code-based service would charge zero fee, whether you use a card, a UPI platform, or a Paytm wallet. It looks like what Paytm is trying to do is to push its QR code-based service, particularly for small merchants. We caught up with Sameer Abbott, the senior vice president at Paytm, who says the move is in order to make digital transactions for customers more seamless.
When we launched QR, the most popular form of payment used to be Paytm wallet, right? People used to carry money in their wallet and would conveniently pay any of the merchants that would display that QR code. But now I think in last few months, what we've been actively doing is to enable much more payment options than just wallet as the source of funds. So with the launch of UPI about a month back on Paytm, which gives us access to our consumers' bank account directly, and plus obviously Paytm Payment Bank, Savings Bank access is also available to our users. So what we're now allowing a merchant is to tap all the funding source that a consumer today has and make that seamless payment.
Right, moving on. It's been a good year for Indian equities, but some stocks have performed a lot better than others. Bloomberg Quint brings you the multi-baggers of 2017 and the story behind their rise. Today on the list is Bhansali Engineering Polymers. Somit Sarkar gets us all that has driven the rally for this stock this year.
Year to date, the value of the stock has gone up by around 8 times. So let's see what the company does first. So Bhansali Engineering is a 2,900 crore market cap company which manufactures Absolac, which is commonly known as ABS. So ABS is a plastic material which you commonly see in car, which is used as bumpers, spoilers. It is also used as a raw material in telecommunication and luggage materials. So the company has a production capacity of this ABS as of around 80,000 tons per annum. Now if you see the financials of the company's revenue has grown stably, but if you see the EPS, in the first half of financial year 2018, the company has earned more than what it has earned in the full financial year 2017. The EPS in the first half was around 2.5 rupees as compared to 2.1 rupee in financial year 2017. Now this is clearly on the back of improving margins. You can clearly see the EBITDA margins. It has gone up to 14% in the first half from 10% in the financial year 2017. So let's see what has worked, the things that have worked in favor of the company. Now, ABS manufacturing market is a duopoly market with only two players, that is BEPL and Ineos Styrolution. So there's no much competition in this market. And because of this, there's a proper demand-supply gap in this market. So the demand in India for ABS is around 275,000 tons per annum and these two players are only able to meet the half of this demand. The remaining 50% is met through imports. So this demand supply, there's a clear demand supply gap in the domestic market, and to meet this demand supply gap, the company has planned capacity expansion plans which will be completely met through internal accruals. So by December 2018, they are planning to expand the capacity to 137,000 tons per annum from current 80,000 tons per annum. And for long term, if you see, by financial year 2022, they are planning to set up a unit which will have a capacity of around 2 lakh tons per annum, and this unit will be set up near a port in Gujarat so that they can also cater to the international demand. Also, along with this, they have a joint venture with Nippon, which has helped them significantly because it has resulted into significant ties with auto manufacturer. Lastly, steady and continuous rise in volumes. In financial year 2016, they had a volume of around 44,000 tons per annum, and in financial year 2018, they're expecting 72,000 tons per annum. That is around 90% of their current capacity. So the capacity utilization has also gone up for the company along with this. Now, if you compare BEPL with its only competitor, that is INEOS, though the company's revenue growth was similar to INEOS, but if you see the net profit and EBITDA, it has grown at a significant rate as compared to INEOS. The company's net profit grew at a compounded annual growth rate over FY12 to FY17 at a CAGR of 132% and EBITDA at a stagnant rate of 43%. On the return ratio side, BEPL has outperformed INEOS there also. On the return on equity was 22%, return on capital employed was 34%, while return on asset was around 8%. Now let's see what the valuations say. On FY18 P and FY18 EV to EBITDA, the company's shares are cheaper as compared to INEOS, but if you see price to book, it is but expensive compared to INEOS. So FY18 P for BEPL is around 34 times, while FY18 EV to EBITDA is 44 times. Lastly, let's see what are the risks that are attached with BEPL. So raw material is one of the major cost component, and we have seen a lot of fluctuation in the raw material prices in the past. So any volatility there could impact the bottom line of the company. Now most of this raw material is imported, so currency fluctuation comes in. And as the company does not have any hedging practice, currency fluctuation also poses a risk for the company. And any delay in this planned expansion could potentially hurt their market share.
The Rajya Sabha adjourned twice today after the opposition disrupted proceedings over the Prime Minister's remarks against Manmohan Singh. The opposition during the 0 hour demanded that the Prime Minister come to the House to clarify his comments against Dr. Singh during the Gujarat poll campaign, where he had alleged that he was conspiring with Pakistan to defeat the BJP in Gujarat. House Chairman Venkaiah Naidu said that there was no question of giving an apology as the statement was not made in the House. Now, Alibaba's new data center in Mumbai will become operational next month. In a statement, Alibaba Cloud, the cloud computing arm of Alibaba Group, confirmed the development and said that clients can start to sign up for services to be delivered in India. The Mumbai data center aims at meeting the demand for cloud computing services among India's small and medium businesses. With the Mumbai center, Alibaba Cloud now has 33 available zones across 5 economic centers globally. Moving on now, and the Bitcoin's been in the news for a while. Those prices plunged nearly 15% in Asian trade today. The sudden fall was driven by investor fears on news of hacking at the South Korean exchange Ubit. Ubit has said that it will close and start bankruptcy proceedings after hackers stole 17% of its assets. According to Bloomberg News, separately, U.S. authorities yesterday suspended trading in a popular Bitcoin-related stock, citing concerns about market manipulation. The cryptocurrency's share price has risen to 1,700% between the end of September and Monday evening before the Securities Exchange Commission intervened to halt trades until January the 4th. Now, the volatility in the Bitcoin prices has got the experts split right down the middle. Co-founder and CEO of BTCC, that's Bobby Lee, believes that Bitcoin is a great asset class, while the CTO and co-founder of ANX International, Hugh Madden, likens the Bitcoin rally to the tech bubble.
What we're talking about is a truly global, non-national digital asset class that's brand new. It just came out, about 9 years ago. And the question is, does it really only stay at this so-called $300 billion level, or is it a $1 trillion asset class? My opinion is long-term, this is one of the great major asset classes, just like stocks, real estate, bonds, precious metals.
A lot of interest and a lot of hype in the technology, and the market prices seem very speculative. On the other hand, I guess we're all a bit cynical about the fact that a lot of change can come through that. And out of the tech bubble, we saw some world-changing companies and some world-changing technology. And so it's certainly gamble, certainly speculation. But on the other hand, we all expect some serious companies to come out of this. And I think also most asset classes are inflated a little bit. You can hardly turn around without bumping into an inflated asset class.
Now, Donald Trump's just moved a step closer to securing his first legislative victory since he took over at the Oval Office. The Senate has passed the biggest tax overhaul in more than 30 years, with 51 votes in favor of the bill. The US Congress, which had already cleared the bill, will give its final stamp of approval later today. The bill aims to deliver a deep, permanent tax cut for corporations and shorter-term relief for individuals. It slashes the corporate tax rate to 21% from 35%. Most middle-class workers will also get short-term tax relief, though independent analysis has shown that the amounts are not large. According to the Congress's Joint Committee on Taxation, the new bill is likely to reduce revenue by $1.5 trillion over the coming decade. Taking to Twitter, Trump called the legislation the biggest tax cut and reform bill in history. Despite being a bill that aims at cutting taxes, though, the Republican tax bill has scored poorly in public opinion polls. Not just that, the reduction in revenue also has garnered critics against the bill. Stephanie Baker of Bloomberg tells us why it remains unpopular.
Yeah, it's very curious. I mean, historically, tax cuts have been very popular, but the polls are indicating that 2/3 of Americans disagree with the plan, which indicates to me that the Democratic message is getting through that this is a tax cut for the wealthy and that the middle-class tax cuts are minimal. Now, the question is, will that change as the year goes on? When will people start feeling this tax cut, and will they feel it enough for them to change their opinion on it? They've also been hammering home this message about the deficit for years, for as long as I can remember. So the fact that the deficit has not been talked about as part of this tax bill is really quite remarkable. And I think what we're going to see over the next year is the Republicans turning to entitlement cuts to Medicare and Social Security as a way to reduce that deficit. And I think that will make this tax bill even more unpopular and will give Democrats a platform to campaign on, that could be very effective.
In a big setback for Uber, the European Union's top court has ruled that Uber should be regulated as a transport company and not a digital service. The decision from EU's Court of Justice clarifies that connecting people via an app to non-professional drivers forms an integral part of a transport service. Uber has argued that it is a tech platform connecting passengers with independent drivers. The ruling is significant and is watched by the tech industry as it could dictate how firms may be regulated across the EU in the future. Well, with that, it's a wrap on this show, but I hope we helped you catch up with all that you missed through the day. Thanks for watching. This is Bloomberg Quint.